Hello, everybody, and welcome back. Today, my guest is Kiran Nandra. Kiran is the head of emerging market equities management at Pictet Asset Management. And today we want to discuss her recent outlook for Emerging Asia 2022. Welcome, Kiran.
Thank you very much for having me, Thomas. It's a pleasure to be here.
Kiran, Asia is the starting point and at the same time, the main affected party of the current supply chain disruptions. How much of an impact is the issue having on Asian financial markets 2022?
No, it's a really topical question, and I think it's having impacts globally. But on emerging markets and emerging Asia in particular, we are starting to see some sort of raw cost material upwards increases in pricing. Now, that really did start in the second half of last year. But our base case is that actually starts to mitigate somewhat during Q1 and Q2 of this year. Some of that's just purely a function of that very low base that markets were coming off of last year. So that's kind of on the one side, which is very much to do with kind of raw materials. On the other hand as well, it's interesting about on the supply chain side, because I think one area where we're still seeing a lot of tightness is on the semiconductor supply chains as well. And that has a really, really big impact on everything that we as daily consumers consume, and that also kind of impacts Asia as well. So I think we've got this structurally very, very high demand that's coming through. And supply had actually slowed down on the semi side, which led to, for example, a number of Taiwanese tech names in particular producing some really, really strong numbers. Now, I think looking ahead, it's possible that we get some sort of, I wouldn't say weakness, is probably too strong a word, but we get some sort of mediating of that supply-demand imbalance. And so you might get some weakness of pricing in the next by the next kind of quarter or so. But I think after that, especially in the second half of this year, we'll still be seeing some very, very strong pricing. But that's particularly on the semiconductor supply chain.
Hi there. Just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now. The question of Chinese growth dominates the emerging markets debate. So what can we expect from China and emerging Asia in 2022?
Well, China was the story, and unfortunately for the wrong reasons last year. It was a combination of the regulatory reset. Then we had a little slowdown on the property side, and clearly property makes up roughly 30% of Chinese GDP. So the question is, where do we go from here? So I think a couple of things are quite interesting. So first off, our base case is that we are now past that kind of regulatory peak, the regulatory reset. It doesn't mean that the issue has gone away, but I think the extremes, I want to call it, that we saw last year are unlikely to be repeated this year. Secondly, if you look at where sentiment is today for Chinese equities, it's approaching 2 standard deviation lows, which means it doesn't really take a lot for the market to start moving again, just because there's still a very much a big risk premium that's being priced into Chinese equities. And then linked to that in terms of what might potentially trigger a pickup in the Chinese equity market. So the Chinese central bank and the liquidity situation is actually at a complete opposite to a number of other emerging markets and the developed world. In other words, we're actually starting to see the Chinese central bank and the Chinese government to actually start loosening liquidity. So I think that's going to be actually quite interesting for Chinese markets in particular. And of course, we haven't really spoken very much about A shares versus offshore markets. But I think last year again, it's very much a story of the offshore market really suffering from the regulatory crackdown, and maybe you start to see a bit of reversal there. And the reason why, just very funny, I'm speaking so much about China is just because it has such a huge impact on the rest of the region. And so clearly what's happening there is very, very important.
Yeah, so let's stick with China for a while. So the trade conflict between China and the US has moved out of the headlines. To what extent will this issue continue to affect Asian economies?
Yes, so I think ultimately our base case is that there will always be some level of low level or underlying conflict is too strong a word, but there will always be noise around this issue, and I don't think that's going to go away. In terms of really how it's impacted markets and supply chains, actually, so we saw a real shift way back in 2016. Now it seems a long time ago. We already started to see, supply chains starting to move out of China. And that had been somewhat linked into just actually, ironically, people don't realize that actually China has become a little bit more expensive in terms of just the cost of doing business there. And you had supply chains moving into other countries like India, Vietnam, Indonesia, Bangladesh, etc. So I think that's just accelerated that move on the link to the kind of the geopolitics. And I think perhaps another country or industry that really has benefited from these recent developments has been Taiwan. And in terms of just, actually, we might need to edit that. We might need to edit that, Thomas. So in terms of another region or area that's benefited from this, it would be Taiwanese tech. And in particular, for example, US players not actually going into that market as much before. So Taiwanese tech has really benefited from that trend.
Among international purchasing managers, the China plus one strategy is now considered a must. So which markets in Asia benefit particularly from this risk avoidance strategy?
Yes. So it's a couple of ways to look at it. So we've already seen, for example, textile manufacturers or producers now looking to countries outside of China. And I can mention a little bit earlier on Vietnam, Bangladesh, to a lesser extent, Indonesia. But I would say from another angle, and I think this has been the kind of the runway story from last year, in complete opposite to China, it's been India. So India is the other giant in the Asian room, if you like. And we've seen a lot of people now actually looking to diversify and put those assets to work on CapEx in India. So, I mean, and one thing that we've been struck by as well is that probably around 3 years ago, always the head scratcher that we had was why there was not more IPO activity, e-commerce activity, fintech activity in India. And last year was really the big difference there, where you saw a lot of companies coming to market, a lot more IPO activity. And I think that really is, when in investors' minds, how people are thinking is we have China, which clearly is a huge growth driver. On the other hand, you have a country like India, which also provides a lot of growth opportunities, but perhaps a little bit more nuanced than China is.
Inflation and further interest rate hikes, especially in the US, are back in the market as factors. So what risk does a stronger US dollar pose for emerging Asia in 2022?
Well, it's funny you should ask, because I've just come from speaking to our macroeconomist literally just before having this discussion with you. And he was presenting on that. And it's really interesting, because it's not just the fact of having higher rates in the US that is the kind of distinguishing factor, but it's at the same time, what is happening with Asian growth. And in those instances where you've had high US interest rates or increasing interest US rates, combined with perhaps tepid EM growth, that is normally when it's a complete, I would say, risk-off type of attitude. However, we are expecting EM to still have high growth and higher growth than developed markets, which will act as a tailwind for the region. So even if you do have higher interest rates, I think for sure that introduces a level of volatility, but it's against a backdrop where actually, on a macro perspective, EM Asia is doing pretty well. And then I think perhaps the one thing worth bringing in, because we look at things from a very bottom-up perspective and kind of company by company. If you look at how indebted Asian corporates are, actually they seem to have taken the crisis, the pandemic, as a way to actually just kind of tighten the ship, tighten their operations, and actually cut down on leverage and on debt. So we're kind of coming into this period of perhaps a bit more uncertainty, but again, good macro backdrop and actually more healthy balance sheets. So I think, I think it's not going to be completely plain sailing as it might have been 3 years ago, but I think we're in a strong position, top down and bottom up, than perhaps people give the region credit for.
Kiran, maybe one final question for you. Which countries in Asia offer the best opportunities over the next 12 months? And in which industries are you and your investment teams currently finding opportunities opening up?
So if you think about next 12 months, I would still think, just given the year that China had last year, China could actually be very, very interesting, given how people are positioned, given still the level of slight kind of uncertainty about what happened last year, and the fact that the country will be loosening liquidity, I think could make it very, very interesting. I think in addition, Indonesia looks very interesting. So you've got we haven't been speaking much about the commodity side, but Indonesia is a country that should benefit from a tighter commodity complex. And if you were to take a slightly more a long-term view, India is always going to be provide a lot of opportunities. The only issue we have with India today is that it's so expensive. It's trading at roughly 2 standard deviation premium to the rest of Asia. So that makes us a little uncomfortable in terms of just tactically than 1 year period. But otherwise, we're finding a lot of opportunities in financials, and that's not necessarily because people think, they've got a rising interest rate cycle. Doesn't that naturally benefit banks and insurers? It's not so much that as it is just what we would consider to be kind of specialty finance types of opportunities. So it's like Taiwanese leasing. It's in the past it's been Thai consumer finance, Chinese insurance companies. So it's very, very diversified. And otherwise, IT still looks quite interesting, both on the tech hardware and the semiconductor side. And I think those are really the areas where we're seeing a lot of opportunity. And one final one will be within industrials, the renewable space. But there it's really important to keep an eye on valuations.
So this was Kiran Nandra, Head of Emerging Market Equities Management at Pictet Asset Management. Thank you very much, Kiran, for being with us today and sharing your insights.
Thank you very much for having me.